Happy Friday, traders. Thanks for joining me today in this episode number 1989. It is non-farm payroll unemployment Friday. That's where we're at, and there's a lot to cover today. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to jump right into it and look at the Convergent Trading pre-market summary sheet. As you can see in front of you, risk on sentiment. The market yesterday rallied once it got through the 4181 as expected, and it pushed into the or close to the 4200, and currently we're above that. We've actually taken out the all-time high on the non-farm payrolls release. The non-farm payrolls came in pretty strong. We had a relative, it came in pretty weak actually. We had a bit of a surprise there. Non-farm payrolls came in at 266,000 versus the estimated 1 million previous is 770,000. Unemployment rate came in at 6.1%, was expected at 5.8%. So a little splash down and a splash up, as you can imagine. Confusing times. Strong unemployment means the government can stop printing or slow down the printing presses. A weak non-farm payrolls may be good news because the economy needs more support, and people need more stimulus checks. It's kind of an upside down world economically, but this is where we are. So that's the key element. That's the key element. There's not much more to cover here other than to say that we do have a risk on. DAX leading the pack, 193 points up 1.27%. And the NASDAQ, of course, very strong. The NASDAQ taking a very strong pop, much stronger than the S&Ps. Currently, the NASDAQ was relatively weaker than the S&P yesterday. It is up 160 points or 1.18%, but solidly risk on for today. And we have wholesale inventories remaining at 10 Eastern. So far, the ES has traded 255,000 contracts. We've had 41.91 to 42.14. So that's 23 points of range or so. 22 and a quarter points of range. And the inventory 71% long. Okay. Crypto's not giving away any territory at the moment, still holding steady. Bitcoin at 57,000 and Ether at 3,500. Copper strong, gold is strong. So there it is. Let's take a look at what was expected yesterday. Yesterday, the primary scenario was a push to 67, a test of 51 right here, and then a push to 44.43. So that was the expected path. Again, please don't confuse this with a future prediction or some sort of a projection of what the market is going to do. The goal with these scenarios is to identify the key reaction areas and to be prepared for or visualize a path to get in there. I don't really care if the path is correct or not. May get a little ego boost when it is, but overall, we don't really care if the path is on point. What we do care about is what areas are tested, the quality of those tests, and what happens after those tests, and that's how we stay with the narrative. So that's yesterday's plan. Again, push to 67, as you see it in front of you here from yesterday's video, push to 51. 51 is important. Remember, 81 Well, 67 from the top, 81, 75, 67, 51, 44, and then below there, we start to move into 23 and 40, 67. We talked about these levels yesterday, and I'm going to keep drilling them into your head. If you trade the S&P, you need to know those numbers. Here's what actually took place in our review segment. So you can see from the screen already how busy yesterday was. Lots and lots and lots of Renko bars. Just a lot of rotations. You can see the 3 pixels per bar set there. That's the standard. And it's a lot of rotations. So a lot of opportunities yesterday. Pretty busy day yesterday. And so we open up, and what do? We open up and we drop immediately. We put in an opening swing low at 57, push back up, unable, continue down to 53, and then we rotate to where? 67 on the dot. So now we're looking for 67 to hold for a test of 51 right here. So it pushes back down, comes back in to the full session VWAP, and then holds that, and then continues to 51 check. Next, we're looking for 43, 44 from our map. Remember the map that we drew pre-market, 43, 44. That is right here. And then it consolidates. We don't get an impulse higher, pushes into 43, 44. Check. Scenario 1 is complete. And then what ended up happening is actually the manifestation of scenario 2. Let me bring this over again without resetting the screen. There's scenario 2. So again, 67, 51, 43, and then scenario 2, push to 75, consolidate at 75. Big battle area for the last few weeks, and then push into 81 and taper off. So that was scenario 2. Here's what ended up happening. We had both of these scenarios yesterday. We pushed through into 75 right in here to 79.50, lower high by a tick at 79.50, 79.25, and we consolidate right on top of the 75. We form another high volume node at the 75, and the 75 has been well traded over the last couple weeks. We come back to where? We come back to right on top of the mid, the mid test of 41.60, and then from there it just launches off. Once the 81 goes, you know, the prior session high is 80. Once the 80-81 goes, boom, it's gone. And then what we have here is a breach of the prior day's low as well as the prior day's high. This is not a neutral day, but what we did is we traded both sides of Wednesday's range, and we finished on the extreme high. So it's almost like a neutral extreme day against the prior day. So this creates a very bullish environment. So let's take a look at that for a minute. Why I'm saying that? Back to our big map, the composite chart. Remember, each one of these bars represents a whole day's trading in RTH, pit session. And what we did on Tuesday is we tested down into the 41.23. We pushed it by 2.5 points, and that's fine. That's less than one rotation. And then we start to walk back up, but we're building this really strong volume node here, and we have a lower high, lower low on the weekly. So it looks like it is starting to reverse and roll over as I talked about. This is a rounded top, and it's starting to reverse over. And yesterday, what needed to happen is for the buyers to push through that 80-81, and they did. They reversed the prior day's high. They pushed through the point of control from last week. They pushed through the low volume node from this week, the little gap here that we left behind, and we are now in a short squeeze. And we ended up taking out the 42.11. the overnight high being 42.14. So pretty well done effort here by the buyers to take some control back, and we are back near all-time highs. From there, I know I'm speaking quickly because I want to move on, let you guys go. From there, you can see here that we had a pretty strong push on Friday, a lot of single prints in this range. And then we flagged in the overnight session, we held right up against the top of the range. We held right up against the top of the range from yesterday, very bullish, still fighting that 4,200, very bullish. And now we're coming in, we're at 4207.50. We've breached the prior week's high. So what we have is one-time framing down on the weekly coming to an end as well. Daily, weekly, monthly, all pointing on the buy side. So I'm expecting that this is likely to continue to get supported and to push higher. The key price beneath us now, you can see this cluster right here at 4180, 4181 down to 4180. This cluster here is now key support. So anything above here is likely to continue to drift, and we're likely to continue to push the measured move to 4220 and above. Capiche? That's what we have in terms of what's been achieved so far. Looking at the order flow this morning, there was a lot there on the non-farm payrolls. There was a lot of volume that went through. The SOC for non-farm payrolls was immediately taken. The SOC was 4206 quarter or so, and we traded, we fluttered around it, and now we're holding steady above the 4200, and the book is a little bit stacked. You can see some size there at the 4220, which is the measured move target up here. Some pretty good size, 655 contracts offered, with about 3/4 of that block being a single large block order. You could see the book is stacked a little bit beneath us, and the heat map is relatively noisy. So overall, expecting this to be relatively active for the first hour and a half, and then beyond there, I think we're likely to die out as we normally do with non-farm payroll day, and then we might see some margin liquidation or margin squaring at the end of the session today. Okay, so let's take a look at what's expected for today. All right, let's set this chart up. I'm going to squish this chart quite a bit because we want to refer back to what we've done. Here we go. I'm going to refer back to what we've done over the last few weeks because there's a lot in play here. Primary scenario, select a color. Primary scenario, looking for an open auction out of range that responds. Remember, the inventory is something like 70% long. Looking for longs to respond a little bit. Not expecting it to fall below 4,200 or so. Looking for an impulse at some point this morning to push us through to the 4214, and then for 4220 to be in play. It's likely to continue above 4220, but I'm expecting us to close in this 4220, 4218 area. So bullish this morning. I don't see a good case for it not being bullish. Secondary, push higher push higher, and then impulse down, consolidate, and then basically trade into the lower distribution of the overnight session. Maybe take out the overnight low, but I'm not expecting too much play on the short side. Here's the thing, folks. We keep pushing these strong negative deltas. Remember, the day session is the gray band. The day session is the gray band, or the dark gray band. It's all gray. The day session is the dark gray band. And look at what happens in the dark gray band. Constantly strong negative delta. I have not seen this before, by the way. The market is selling size pretty much every day during the day session. It'll float around during the overnight session as it is now. But it just seems like ever since we pushed through 4,000, they're hitting the bid, hitting the bid, hitting the bid, and hitting the bid, and hitting the bid with size. We've seen over the last 2 weeks, we've seen 3,000 lot sweeps, $2,500 lot sweeps. This morning at non-farm payrolls of 4205, we saw 1,700 lot get squeezed, get swept, and then the market comes back up. So price keeps pushing higher, but the delta keeps sweeping down. And I cannot explain that. I don't know what these participants are doing. I can only imagine, based on the action, that these are hedges, in that price keeps moving up, and that's fine, but somebody's protecting to the downside using futures. Futures, remember, are a very efficient use of capital due to margins, which causes them to be risky. But there's some sort of hedging or something, because oftentimes they're not working these orders. If they were working these orders, you'd see them on the offer getting lifted. So you'd get positive delta while the selling occurs. So you'd have an iceberg on the sell side getting lifted, which would give us positive delta as price moves up, which is what would normally happen. This is not what's happening here. This is just sell up market, almost like they do for rollover to hedge delta or to hedge gamma. But price keeps defying that. And as you can see very, very clearly here, we have a line that goes across right here at this VPOC. And now we're above it, so I have to go with what the price action says versus the delta. I cannot explain that delta other than to say that there are some aggressive hedges going on potentially. We trade price. We don't get paid on delta, so pay attention to price. It's just nicer to hold on. It's easier to hold on to something. It's easier to hold on to a short if the delta is going with you. It's easier to hold on to a long if the delta is rising. You get that reassurance, and you get you can see that the volume is with you. But lately, it's been very, very whippy. So if you're having a hard time currently trading this stuff, it doesn't surprise me. Just stay calm. There's no sense getting angry at the market. It's like being a surfer and getting angry at the waves. It gets you nowhere. Stay calm. Manage your risk. That's the key. Keep your risk in check, and then just make sure you're able to come back tomorrow, and the market regime is likely to change. The cycle is likely to change, and it becomes easier, hopefully, to see what's going on. One way or another, this is likely to break. That's just the nature of the market. We didn't properly test the 4,000 from above, and it's been pushing with this negative delta sweep all the way through. I'm not sure what to make of it, but there's a lot of money floating around, and where are you going to put your money? You're not going to put it in the European markets. You're not going to put it in treasuries all that much. You don't get much for it. So it ends up going in these big tech or the U.S. market in general or crypto. And that's what we're seeing. Tons and tons and tons of money floating around, chasing returns, and the best returns so far are within the U.S. market, the crypto space, and commodities. Lumber's at $1,400, was at $250 just a year ago. It's pretty crazy what's going on in the commodity space if you have not looked. Copper, lumber, even the grains, all tons and tons of inflation there that we don't see coming into the CPI for some reason. Anyway, I'll stop ranting. Just stick to the program, watch the price action, and execute on your plan. Adding all the noise, which I think I've just contributed to, doesn't really help your trading. Good luck.